Welcome to the Daily Business and Finance Show. AI Apocalypse, Musk's warning and the future of jobs, October's unexpected employment dip, and the Fed's impact on S&P's stellar week. Plus, a deep dive into bank stocks' historic low against tech highs, deposit delays rocking U.S. banks, and why Palantir is AI's messy. Also on deck, China welcomes Micron expansion amid easing U.S. relations and decoding the implications of the Bankman-Fried verdict for crypto markets. Stay tuned after this short ad break to unravel these headlines further. Elon Musk, the CEO of Tesla, has forecasted that artificial intelligence, or AI, may make all jobs redundant in the future. This statement was made following a worldwide summit where leaders and significant AI companies like Google's DeepMind, Amazon, and Microsoft endorsed an agreement for safety testing of sophisticated AI models. Musk is in favor of this initiative and stresses on the necessity for external safety inspections to avert potential societal and national security threats.
In October, the growth of jobs in the United States experienced a slowdown. The new non-farm payrolls added were 150,000, which did not meet the anticipated figure of 179,000. There was a slight increase in unemployment to 3.9%, and there was a decrease in the labor force participation rate to 62.7%. Despite these changes, average hourly earnings remained consistent and futures for major U.S. stock indices saw an increase. This information implies that the Federal Reserve's stricter monetary policy is successfully moderating the economy and managing inflation.
The S&P 500 index experienced its most successful week of the year, with a surge of 5.85%, closing at 4,358.33 points. This was largely due to a dovish Federal Reserve and an encouraging jobs report. The tech-centric Nasdaq Composite saw an increase of 1.38%, while the Dow Jones Industrial Average grew by 0.66%. Despite job growth in October falling short of expectations and a minor rise in unemployment rates, the market continues to maintain high levels of optimism.
Research conducted by Bank of America indicates that U.S. banks have hit an 80-year low in comparison to the S&P 500, while technology stocks are reaching record-breaking highs. The study highlights a significant decrease in bank stocks since the 1980s, culminating in an unprecedented low recently. In contrast, technology stocks have soared beyond levels observed during the dot-com bubble era. This year has witnessed downturns for major banking institutions such as Citigroup and Bank of America. On the other hand, tech behemoths like Apple and Salesforce have seen considerable growth.
Bank of America, in conjunction with other significant banks such as JP Chase, U.S. Bancorp, Truist, and Wells Fargo, have alerted their customers regarding possible deposit delays. This is due to a processing issue at the automated clearinghouse. The issue, which impacts less than 1% of daily transactions within the United States, was allegedly triggered by a manual error. It's important to note that this is not associated with any cybersecurity breach.
Wedbush Securities has drawn a comparison between AI company Palantir Technologies and football legend Lionel Messi, forecasting that the firm will take advantage of increased business and government expenditure. Following robust third-quarter results and an upward revision in guidance, Palantir's stock value climbed by over 4%. The company is witnessing a surge in demand across various sectors, demonstrated by a 34% growth in its customer base. Additionally, it reported its fourth straight GAAP-positive quarter with revenues amounting to $558.2 million, exceeding market predictions.
Wang Wentao, the Commerce Minister of China, has suggested that the nation is receptive to U.S. semiconductor company Micron Technology broadening its activities in China. This action hints at a possible reduction in strain between the two countries, subsequent to recent U.S. export limitations on crucial technologies such as artificial intelligence. The declaration precedes an imminent economic summit where it is anticipated that U.S. President Joe Biden will convene with President Xi Jinping of China.
Sam Bankman-Fried, the individual who established the now non-operational cryptocurrency exchange known as FTX, has been found guilty on 7 separate charges related to fraud and conspiracy. He stands accused of misusing billions in customer funds and tampering with FTX's financial records. As a result, he could potentially spend many years behind bars. Despite an initial market reaction that saw Bitcoin lose $1,000 in value following the verdict, the sector dealing with cryptocurrency remains robust and hopeful for more regulation and credibility.
And that wraps up today's episode of the Daily Business and Finance Show. Stay informed, stay invested, and until next time, keep aiming for those financial stars. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.